I think Bitcoin's easy 500,000. Like that's not even hard. That's a cakewalk. That's a walk in the park. But beyond that, can we really take the whole global monetary system? He's like, Mark, are you joking? Of course that's going to happen. And he lays out an exact step by step why it's not like, to me, 10 trillion is like, it's done. That's the monetary value of gold. Bitcoin's better than gold. That's it. Because stocks and bonds generate their return from economic activity, inflation, GDP growth, et cetera. That has nothing to do with Bitcoin. Bitcoin prices are determined by the technology itself, by the adoption, particularly of young people, millennials, and the change in the level of fiat in which we price. Because the thing that just gets, you got your orange shirt on. Look, I do have on, it is Bitcoin Pizza Day. I have the orange pants and I have the Bitcoin Pizza sock game. So I'm ready.
Mark Yusko goes right into one of the most overlooked aspects of investing today, the enormous generational potential that digital assets, particularly Bitcoin, offer. Yusko reminds us that Bitcoin is a technological revolution encased in a financial asset, even though detractors continue to hold on to antiquated theories. He contends that adoption is still in its infancy and that the exponential growth that lies ahead will dwarf the internet explosion. Ignoring this asset class could be the largest error made by long-term investors in the coming 10 years. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
It's so not correlated that it's kind of silly when people talk about it. In periods of dislocation, particularly liquidations of leverage, all correlations go to one. Stocks, bonds, currencies, commodities, everything. But those are garbage numbers. It's kind of like when people look at the PE ratio of the S&P over the last 10 years and say, relative to that. I'm like, but that's polluted data. So the long-term correlation is because stocks and bonds generate their return from economic activity, inflation, GDP growth, et cetera. That has nothing to do with Bitcoin. Bitcoin prices are determined by the technology itself, by the adoption, particularly of young people, millennials, and the change in the level of fiat in which we price. Because the thing that just gets, you got your orange shirt on. Look, I do have on, it is Bitcoin Pizza Day. I have the orange pants and I have the Bitcoin Pizza sock game. So I'm ready. And so, Bitcoin's been making all-time highs in the depths of quote unquote the bear market in plenty of places like Venezuela and Turkey and Argentina, because they devalue their currency even worse than the Japanese and the Americans right now. So this idea that we should be surprised that we keep making all-time highs, well, of course we're going to make new all-time highs, because look, we printed 80% of all the dollars that ever existed in the history of the Republic, 249 years, 80% in the last 5 years. That's a bad thing, right? We are witnessing failed auctions of treasury bonds. That doesn't happen very often, and it's not a good thing. We're witnessing literally loss of control of interest rates in Japan. Clearly not a good thing, given they're the most indebted country in the world. And at some point, and we have lots of history, and I don't want to go here because it's a dark world. There is a point at which a country does lose control and you get a hyperinflation. And look, the world doesn't end. Germany still exists, but the people who lived in that time of wheelbarrows of Deutschmarks, life kind of sucked. And so if you happen to be alive during that period, it can be very, very painful if you haven't diversified out of fiat into these other things. And I think we're perilously close for the West. That's the point, I'll go, is I'm not saying that we're going to have the total hyperinflation wheelbarrows like Venezuela, because as you really well pointed out, this reserve currency status that we are clinging to, like with our fingernails, it's going away.
You even have Larry Fink saying that, by the way.
It is going away, and China has their eyes set on the prize. Everybody thinks it's going to be Bitcoin next. It's not. I think it's going to be the renminbi next, then ultimately Bitcoin, because it's going to take a while for reverse Gresham's law to work. And I think Bitcoin's easy 500,000. Like that's not even hard. That's a cakewalk. That's a walk in the park. But beyond that, can we really take the whole global monetary system? He's like, Mark, are you joking? Of course that's going to happen. And he lays out exact step by step why it's not like, to me, 10 trillion is like, it's done. That's the monetary value of gold. Bitcoin's better than gold. That's it.
Bitcoin improves gold by taking everything that makes it valuable. In contrast to gold, Bitcoin is easily divided into 100 million small units known as Satoshis. Additionally, it is borderless and lightweight, enabling you to send value in a matter of seconds to any location in the world. Mark Yusko adds a fun twist by coining the phrase Sat Life, a play on the popular Salt Life stickers seen in beach towns across the US. He believes that in the future, people won't think in whole Bitcoins, they'll think in SATs. This shift could help overcome what he calls the unit bias problem, where people think they've missed out just because they can't afford a full Bitcoin. Yusko also touches on a more serious issue, the growing debt crisis in the US and other Western countries, and how Bitcoin could play a role in protecting wealth as traditional systems become increasingly unstable. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
The value of gold is almost 50 trillion now.
No, the monetary value. Remember, half of gold is chalices and jewelry, and that doesn't count. I'm talking about the monetary value, the stuff that's in the central banks that is the base layer of money. And it probably is closer to 15 trillion than 10. But everyone talks about the total value of above ground gold. Well, your gold watch doesn't count. I mean, it could be used as money in a pinch, but really I'm talking about the base layer that sits in the central banks. And so that's easy. But Murray says, no. It's all of it. It's all 100 trillion of knowable wealth, because history says that bad money crowds out good. That's why it's called Gresham's law. And you see an example after Turkey, after Venezuela, after all the places where bad people get in charge and they hyperinflate because they get rich because they own all the stuff, and they impoverish their people, and then they stay in power because they promise the poor people little scraps like free electricity or gasoline. And that is gone on for actually millennia. Bad money crowds out good. But Murray will say, no. This time, because we have perfect money, good money will eventually crowd out bad. And it's a very compelling argument, particularly when he tells it. Well, it's incredibly good for crypto because the only way out, to Iago's point, once you're fully indebted, you got four choices. You can pay it back. Problem is, if you just took everybody's assets, not their income, but everyone in the United States' assets, you couldn't pay back the debt. So that's off the table. You can restructure it, but someone would have to take the other side. And if we can't sell bonds at 100 cents on the dollar, I mean, we can't give them away. How are we going to get people to take 60 cents on the dollar? That ain't going to happen. So then you can default on it. What happens if you default on your debt? You're out. Politicians don't like out. They like in. So the only way out is to devalue your currency, to inflate away. And that is why we created the central bank in the first place. Because before 1607 or 1609, I don't remember the date, before the Rothschilds created the first central bank in the Netherlands. Remember, the Netherlands, no offense to anyone from the Netherlands, but it's about the size of like Ohio. How was that the global superpower for about 70 years? Think about that for a second. That's the only way, is they would literally print money out of thin air and pay mercenaries to go, beat up all the other, strong armies around the world. So that model of central banking went from the Netherlands to the UK, from the UK to the US. I mean, do a little research on who JP Morgan's dad worked for sometime. I actually think gold and Bitcoin are the same thing. It's just the modern version of that thing. I mean, gold is the only money that has existed, and that's not 100% true. I mean, we had shells, we had stone wheels, we tried silver, but the bottom line is, for 5,000 plus years of recorded history, gold has been money. Well, what do you mean, Mark? There's been lots of money. No, there's lots of currencies, thousands of currencies, but most of those currencies have disappeared. Like literally, there have been 775 paper currencies in the history of the world. 3/4 of them are gone, like literally gone. Money is an asset that exists in the absence of a liability. That is a very different thing than currency, which is backed by government debt. And I'm not saying that currencies are bad or evil. They're just not money. Gold has been money, but gold is not very divisible and it's not very portable. It's got all the other elements of being money. But if I had a bar of gold here and I wanted to break it into 3 pieces and send y'all a piece, I'm not strong enough to break it. That's the first problem. And I couldn't stuff it in the computer and send it to you. Whereas with a few taps, I can send you or Laszlo or anybody else sats. Like, I don't know if I coined this term, but I'm going to say that I did. So, there's a thing in the South here called salt life. I don't know if you've ever seen the
stickers are literally everywhere. Yeah.
Yeah. They're everywhere. And it's people who go to the beach and hang out. Well, I created an image called sat life, because we should all live sat life. And I saw there was a proposal, like maybe Saturday or Sunday, that they were thinking about changing back, because it used to be that a Bitcoin was a sat. And then they changed it to 100 million sats per Bitcoin. And so we have a unit problem. And that's why on Twitter, I'm it used to be hashtag, now I guess I'm not allowed to use hashtags, but 2.1 quadrillion is the number of sats. There aren't enough Bitcoin to go around, right? Not everyone can be a whole coin.
Plenty of sats, though.
But you can have sats. There's plenty of sats to go around.
Mark Yusko offers a compelling analysis on the nature of money, value, and the direction of our financial system as the discussion comes to a close. He argues that Bitcoin is the contemporary progression of gold and not just a digital asset. Due to its scarcity, durability, and reliability, gold has been used as currency for thousands of years. However, it has real-world restrictions. It is difficult to split, massive, and cannot be sent rapidly throughout the world. In contrast, Bitcoin addresses the drawbacks of gold while gaining all of its advantages. It is easily transferred, accessible to everybody with an internet connection, and divisible into 100 million units, known as Satoshis. Yusko, however, goes beyond Bitcoin's technical aspects. He issues a warning about the unmanageable debt levels in the Western economies, including the United States. It is impractical to repay debt since it substantially outweighs the value of all assets put together. It is politically suicide to default. What is the only remaining option? Inflation. In order to inflate away the debt, governments will persist in devaluing their currencies. This tactic is centuries old and goes all the way back to the establishment of the earliest central banks, such as the one in the Netherlands. In the past, little nations like the Dutch Republic governed the world by printing money and supporting armies rather than through output. Yusko argues that holding Bitcoin is therefore about financial survival in a world where fiat currencies are being progressively depreciated, not merely about chasing gains. Bitcoin is more than simply a financial tool. It's a lifeboat. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.